All right, let's jump right in. Today, we are going deep under the hood of a company that is really powering so much of our modern world, Arista Networks. We're going to tear down their Q3 2025 financial report. But here's the thing, this is kind of like a two-for-one. We're not just looking at how Arista did, we're going to use their report as a masterclass, to really understand how to read any company's financials. We're going to learn the language of business and see what all these numbers are actually telling us. Okay, let's do this.
And, it makes sense to start right here, with the vision, straight from the top. This quote from CEO Jayshree Ullal, it's way more than just corporate jargon. This is their entire game plan. What she's talking about is absolutely critical, right? Because data isn't just sitting in some server closet anymore. It is constantly moving, from your phone, across a company's office, up into the cloud, and now it's powering these massive AI models. So Arista's basically saying, we build the super fast, intelligent highways for all that traffic. It's a huge statement of confidence that they are the essential plumbing for this digital economy we're all living in.
So here's how we're going to break it all down. First, we'll hit the big, flashy highlights. Then, we're going to dissect the three big financial statements: the income statement, the balance sheet, and cash flow. After that, we'll see what the folks in charge are saying about the future, and then we'll wrap it all up with the key things you need to know. Okay, Section 1, the big picture. These are the numbers that grab the headlines, the ones that give you that instant gut check on how the quarter went. And right away, wow, these numbers are impressive. Revenue. That's the total amount of money they brought in from sales. Came in at over $2.3 billion for just one quarter. But the real showstopper? That growth number. A 27.5% jump from the same time last year. That is just phenomenal for a company of this size. Then we have GAAP net income at $853 million. That's the famous bottom line. It's the pure profit after every single expense is paid. And finally, you take that profit and divide it by all the shares of the company, and you get the earnings per share, or EPS, which was 67 cents. Think of it as the little slice of profit that belongs to every single share of stock. And trust me, investors watch that number like a hawk. Looking at it like this really drives it home, doesn't it? What this chart shows is just the incredible speed of Arista's growth. This isn't just some slow and steady increase. This is a massive leap forward. We're literally seeing them add nearly $500 million in sales in just 1 year, for just one quarter. That is the kind of jump that makes everyone on Wall Street sit up and pay attention. It tells you the demand for what they're selling is just red hot. Okay, let's move on to our second section. That huge revenue number is fantastic, of course, but how good is Arista at turning those sales into actual, real profit? Well, to find that out, we have to look inside the company's profit engine, the income statement. So what is an income statement, really? Just think of it like a story. It has a beginning, a middle, and an end, and it's all told over a set period of time, in this case, 3 months. The story starts at the top with all the money that came in, the revenue. Then line by line, it starts subtracting all the costs of doing business. And it guides you all the way down to the final chapter, which answers that one big question. After everything was said and done, did we actually make any money? And here are the key scenes from Arista's story. We start with that fantastic total revenue. Next up, gross profit. This is what's left after you subtract the direct costs of what you're selling. The computer chips, the metal boxes, that kind of thing. The fact that this grew so much tells you Arista isn't just selling more stuff, they're selling it at a really healthy markup. After that, we subtract all the costs of running the business day to day, R&D, marketing, admin stuff, and we get income from operations. This shows how profitable the main business is. And look, it's also way up. Finally, after you take out taxes, you land on net income. The key here is that at every single step down the page, the profit is growing. This is the picture of a super healthy, super efficient business. Let's just pause on this number for a second. $853 million. In 3 months. This isn't sales, this is pure leftover profit. After paying for every part, every engineer, every marketing campaign, and every last dollar in taxes, this is what was left in the bank. It's the ultimate report card for the quarter, and it is a huge, huge number. All right, on to Section 3. Now, if the income statement was like a movie showing performance over time, the balance sheet is more like a single photograph. It's a snapshot of the company's entire financial health on one specific day, September 30th, 2025. And it all boils down to what they own versus what they owe. The balance sheet is actually built on a really simple idea. On one side of the equation, you have assets. That's everything the company owns that has value. Cash, products waiting to be sold, office equipment, you name it. On the other side, you have liabilities. That's everything the company owes to other people, like bills they haven't paid yet. So when we look at Arista's snapshot, you can see their total assets grew by a staggering $4 billion since the beginning of the year. That's a massive sign of strength. Now, here's the golden rule of accounting. Assets have to equal liabilities plus what's called stockholders' equity. Equity is the value that's left over for the owners, the shareholders, if the company sold everything and paid off all its debts. And that growth in stockholders' equity, that's what investors love to see. It's up by almost $2 billion in just 9 months. But of all the numbers on the balance sheet, this is the one that makes you do a double take. $10.1 billion in cash and stuff that can be turned into cash almost instantly. This isn't just a rainy day fund. This is a strategic weapon. I mean, to put it in perspective, that pile of cash is bigger than the entire value of many of their competitors. It means they can outspend anyone on R&D, they can buy other companies without borrowing a penny, and they can weather pretty much any economic storm. This is what you call a fortress balance sheet. So we know Arista is making a profit, and we know they're on solid financial ground. But here's a tricky question. Is that profit on paper actually turning into real cash in their bank account? Because, believe it or not, a company can look profitable and still run out of money. And that brings us to Section 4, the cash flow statement. This is the one that follows the cold, hard cash. This statement breaks down all the cash movement into 3 main buckets. First, and this is the most important one, is cash from operating activities. This is the cash that comes from their main business of building and selling stuff. You always want this to be a big, positive number. Second, cash from investing. This tracks money spent on things to grow the business for the long haul, like buying new equipment or even another company. For a growing company, this is often a negative number, and that can be a good thing. Finally, financing activities shows cash moving between the company and its owners, like buying back their own stock. And Arista's cash story here is just a perfect example of a strong tech company. Look at that. They generated a massive $3.1 billion in cash just from their day-to-day operations. This proves their business is an absolute cash machine. So what did they do with it? They put it to work. They spent about $2.6 billion on investing. That includes buying more of those safe investments for their war chest and also the $300 million purchase of a company called VeloCloud, which is a strategic move to expand what they can offer customers. And then they used nearly $1 billion for financing, almost all of which went to buying back their own stock, which is a direct way to return value to shareholders. Okay, so we've analyzed the past from just about every angle. It's time to move to Section 5 and look ahead. What is management telling us about their strategy and what they think is coming around the corner? When you read what management has to say, 4 key themes pop out. First, AI is everything. They are all in on being the go-to network provider for AI. Second, they point to that VeloCloud acquisition as a key move to help customers connect their global operations securely. Third, and this is important, they are very open about their customer concentration. Having giants like Microsoft and Meta as your top customers, well, it's a huge engine for growth. But the risk is that if one of those big customers changes their spending plans, it can have a big impact, so it's something to watch. And finally, they're focused on the real world, making sure their supply chain is running smoothly, which is no small feat these days. And here's their official forecast for the next quarter. They expect revenue to stay incredibly strong, somewhere between $2.3 and $2.4 billion. Now, you'll see this term non-GAAP. All that means is they've adjusted the official numbers to exclude a few things, like stock-based compensation, because they feel it gives you a clearer picture of how the core business is performing day to day. And by that measure, they expect to remain insanely profitable, with operating margins around 48%. That's a forecast for continued excellence. Whew. Okay, we have just waded through a mountain of data. So let's bring it all together in our final section, the key takeaways. After all of this, what are the most important things to walk away with? Look, if you remember nothing else from this deep dive, remember these 4 things. 1, this company is growing at a truly exceptional rate. 2, it's not just growth for growth's sake, they are wildly profitable. 3, they have a fortress of a balance sheet, with that $10 billion war chest giving them incredible security and options. And 4, management is very optimistic, putting out a strong forecast and tying their future directly to the biggest thing happening in tech, artificial intelligence. And so that really leaves us with the big forward-looking question. Arista has the money, they have the strategy, and they're positioned perfectly for the AI boom. But the world of high tech is, to put it mildly, intensely competitive. So the real story now is, can they use that massive cash advantage and their sharp focus to keep this incredible growth going? That's what we'll all be watching. Thanks for joining this deep dive.
You enjoy our deep dive into companies' quarterlings and fundamental analysis, please like and subscribe to our YouTube channel for more insightful content.